Good morning, everybody. I'm going to go over all the emotions in the stock market that we've seen because of these tariffs and possible fake news, even though I think it may have been an accidental leak. And I'm going to go over why the 10-year Treasury yields are going up in the U.S., even though they should be going down considering where the economy is going, growth, and all of that. But they did trend upward yesterday. So we're going to go over that too. So first things first, let's look at how the stock market works. It's not exactly the way that people think. You would expect people to be value investors. They look at companies, they look at the financials, they invest based off. Some people do, but a lot of people don't. And we can see that here. So what happened on Monday, they announced that there was going to be a 90-day pause on tariffs. That was an accidental leak possibly, but if it's true or not, the market still traded as if the tariffs were on pause. And then the White House came out and said, no, that's fake news. So then we got a crash back down. So we had like a couple trillion up and a couple trillion down, all based off of a headline. Emotional trading, momentum trading at its finest. That's what happened. So that should tell you how the stock market is basically a very emotional place. People invest based off of emotion and headlines more than they do off of fundamentals. So there's a lot of swings in the stock market. And we're going to see this probably persist as all this tariff stuff goes on. So be prepared for that volatility. This is just one example of how volatile it was. Now let's look at the bond yields in the US. So this is a really, really good post because it goes over the fact that the bond yields have been going up in the US, but it doesn't make sense because the last time the bond yields grew this quickly, there was a spike in the S&P 500, as in the stock market was doing well. Stock market's not doing well. So why would there be this jump in bond yields? My theory, and from a lot of people I follow, it's a liquidity crisis, as in people don't have cash, and I mean big companies and countries don't have cash. Remember the difference between stocks and bonds. When you sell a lot of bonds, the price of those bonds go up. It drives prices up versus a stock. A stock's the opposite, right? So there's probably large amounts of US Treasuries being sold because people need cash to cover other positions, whatever they need it for, because of all the other stuff going on in the stock market. And that's driving yields upward. So that's why something doesn't add up. I think that's the something that makes it add up, is these yields aren't going up based off of economic data. You could say inflationary pressure, but if we're going into issues with growth and the economy, those pressures would, those price pressures kind of would balance out in a way. You almost have to choose one. You can't, like recession and inflation are tough things to get on. You can have it, but it's a little tough. So I think that's the reason people are